Never run out of battery again with the INIU portable charger, the slimmest 10,000 milliamp hour power bank that keeps your devices charged on the go. Stay powered up wherever you go. Click the link in the video description to shop now on Amazon.
Today's top story in the world of media comes from France, where TF1 Group has just released its stable financial results for the first half of 2025, despite some uncertainties sparked by U.S. President Donald Trump's trade policy. TF1 Group, one of Europe's leading commercial television networks, is reporting €1.1 billion in consolidated revenue for the first half of 2025, on par with last year's figure. And this growth came mainly from digital advertising revenues that saw a significant boost of 41.4% to €92 million, thanks in part to its AVOD service TF1+. This helped the overall advertising turnover of the company reach €782 million, only down 2.5% on 2024. Now, it's worth noting that while TF1 Group has maintained its outlook for 2025, they're acknowledging a more challenging advertising market than expected, with visibility remaining very limited. But what's interesting is that their net profit did drop from €96 million to €78 million during the first 6 months of 2025, an 18% decrease. The reason behind this decline? The French government has introduced a new surtax on corporate income for large companies whose annual turnover in at least €1 billion. And according to TF1 Group's chief financial officer Pierre-Alain Gérard, this surtax could weigh around €20 million to €25 million on the full year 2025, essentially taking their profit back down to what it would have been without it. But what about the impact of Trump's trade policy and tariffs threats? According to TF1 Group's president Rodolphe Belmer, these uncertainties did indeed weigh on advertisers' investments, which could be a significant concern for the company. The group also recently made headlines with its first-of-a-kind deal with Netflix. The latter will carry TF1's 5 free-to-air channels and on-demand content starting in the summer of 2026. And despite some decline in linear audiences, TF1 Group still managed to keep its ratings leadership in France during the first half of 2025. Its flagship channel, TF1, garnered a 20.3% market share, up 9.2 points compared with commercial network M6 Group. The group's film production and distribution division, Studio TF1, is also seeing growth, with revenues up 6% to €128 million during the first half of 2025. The good news for investors is that TF1 Group's share value has actually risen by 4.81%, reaching €8.05 on the Paris Stock Exchange after unveiling its financial results. Overall, it seems like TF1 Group is navigating some challenging times in the media landscape, but their growth from digital advertising and their unique deal with Netflix are certainly worth keeping an eye on.